So welcome everyone. Thanks for joining us today to wrap up our series, talk about cash flow planning and other business planning tools for your operation. I'd offer Jackson and Pete and Christopher, if he's on. I'm not sure if Christopher is on as well, if you have anything to start us off with today.
I thought last week went really well. I had a couple positive comments there from Aaron, so that was really good.
Good. Yeah, I thought Rob did a really nice job explaining Schedule F and some of that background. So good.
Well, this is Jackson. I'd just like to say thank you to CFFM. You really bring a lot of expertise to the table and appreciate your support. And the same with Native American Ag Fund too. So appreciate it. Thank you.
Well, thank you for the opportunity, and thanks to Denny as well. He's a ad hoc member of our team, not an official team member, but we always like partnering with him on these sorts of things. So appreciate that.
Hello, everyone.
Okay. All right, well, let's get started. And then if at the end we have anything else to share or comments, certainly chat in your comments as we go, and we can open it up for questions at the end as well. So let me share my screen. Maybe, there we go. So today we're going to talk about telling your story to a lender, assuming you will be needing some financing or some support along the way. So whether it's just for you to get a handle on your finances and begin preparing your business plan, or when you are ready to work with a lender, I think this hopefully will be a session that brings some value and some thought to that process. So Denny and I, like we've been doing, will tag team this and interject thoughts and ideas here as we go forward. So with this series, we've talked in session 1 about balance sheets, where you are, session 2, where you've been. Part of that was Schedule F preparation, if you haven't been doing that, or just preparing your income statement in general. And then this time we're going to focus on where you're going through business planning and cash flow projection planning. So today, like I just said, we're going to talk about projections and other business planning resources, and then also wrap up with preparing for a lender meeting when you're ready to do so. It may be somewhat nerve-wracking, but hopefully we'll give you some pointers and things to prepare as you get ready to meet with a lender, and just some thoughts on how to communicate with your lender and have a good working relationship with that person.
Pauline, if I can, this to some of you that maybe are seasoned borrowers, this could be a good refresher, but we're really pointing us today to some real basics, so that if you're new to trying to borrow funds for agricultural purposes, we hope that this is a really good primer for that.
Your audio is pretty low, Denny.
Yeah, you're still pretty quiet.
How do we, should I just try to yell under?
The other option you could do is call in. If you go under that audio settings again, whoops, by your microphone there in the bottom corner, or the call-in number would have been in what I had sent you earlier. So you should have that number and the meeting ID. It was a little bit better there, but it's gotten quieter again. Okay. I'm going to mute this line just so you know, Denny, so that there's not feedback when you call in. And I'll watch for your lips moving if you're talking. So, okay, hopefully we'll get Denny Denny's audio better here, but maybe I'll keep on and then we'll let Denny check in or give his thoughts when he's able to there. Looks like he's working on that. So, okay. So I'll just start out with, we're going to start out with cash flow planning here. Or just planning in general, I should say. So part of that is preparing a cash flow projection. That's pretty common in agriculture. Small businesses, Main Street businesses may do less projection planning. They're working a lot off past performance oftentimes because year over year, things are fairly similar. But in agriculture, you know, we're wanting to look at the coming year because each year is a blank slate, oftentimes a different crop mix, maybe different enterprises, different prices, all of that. So planning for that cash flow for the coming year, and then also looking at operating loan needs if that's a part of your financial request with an institution, with a financing institution. Also, we oftentimes recommend that you monitor and adjust that cash flow as you go forward, just because things do change throughout the year. Take last year, for example, we started out the year and dealt with a pandemic, and that was, of course, devastating for a lot of people. A lot of things needed to change quickly. And as we went through the year, if you were a corn and soybean producer, for example, things changed pretty drastically from by the time we hit the end of the year. We saw better prices. Some farms enjoyed really good yields, maybe better than expected. So each year is its own unique scenario, and it's good to monitor and adjust as you go through the year because of that. Also, business planning is an important component of that as well. So trying or establishing that longer term vision for your operation, doing a formal plan to help with the goal setting and putting that vision, that plan in place, it helps you oftentimes get there when you can lay that out and identify your targets or your goals. You're able to strive for them a little bit better because they're written down and you can monitor them that way as well. So cash flow projections to start. You know, last week we talked a lot about looking backwards. We were preparing last year's income and expense items. We were looking at the past performance of the business. With cash flow projections, like I already said, we're looking forward. We're moving ahead. We're trying to plan for the coming year. And sometimes that's really a multi-year cash flow too, especially if you're have a new operation, have a new enterprise, you're making some changes. You may want to try to project not only this first year, but as you get more established with that enterprise, doing that as well. So why prepare a cash flow projection? I already said pieces of this, but every year in agriculture is unique. We have unique production plans, so your crop mix may be different. You may be planting more or less corn or soybeans, or you may be looking at some specialty crops. If you have a vegetable operation, you may make changes to that crop mix as well. Price outlooks definitely change yearly, but throughout the year oftentimes. And like I already said, that enterprise mix, you may decide to make some changes based on the profitability scenario for different enterprises. Is it working, Denny? Do we need to help? Oops, I muted you. And I can't unmute you. I can only ask you to unmute. Okay. I just see you're trying to talk.
Can you hear me? Oh, wow.
Yeah, there's feedback.
Not good.
Yeah, if we want, we can move it to next week if we think that would be better. Christopher offered that suggestion. Not sure. Typically, we haven't had the audio challenges, so I'm not sure.
You know, Denny, you might check under your under the mute and arrow up and see which speaker you're using, because you've been good in the past. The question is whether it's grabbed a different speaker in terms of selecting a microphone. So that's lower left, mute. There's a little up arrow, and maybe see what.
Okay.
So interject what you were going to say. I know. Sorry to put you on the spot there.
No. I'm going to catch up now because I was too busy looking on. Okay, why prepare it? I'm going there because I do have a couple comments.
If you want me to back up, Denny, I can too, if you wanted to add anything on the previous slide.
No, this is fine. In the interest of time, you've done fine. I just, in the case you didn't say it, under production plan, you know, we're just looking at yield gains, gains in livestock, whatever it might be. But under price outlooks, it's about marketing and what marketing prices you may be looking at. And the enterprise mix, it's, you know, and in the country where I'm living in, the enterprise mix might be soybeans versus corn, whatever seems more feasible. So this is what we're talking about when we say why prepare a cash flow projection. This is the stuff that's different and can change. Okay.
And really, as you do this for your operation, you know, outside of the lender doing it, you yourself can look at, do some of these enterprise mixes look more profitable than others for the coming year? So it doesn't, you know, it's a good exercise for you too to determine what might work best for your operation for the year. Okay. Oops, now I got to click back in here. Okay. So, you know, sort of what I was just saying, the cash flow projection is a tool that the lender will look to and want to prepare each year if you are working with a lender, looking at that operating loan need for the coming year, if that's something that you are using in your operation, and also loan repayment ability. But as a producer, it is a useful task for you as well, looking at, you know, the projected prices and yields and enterprises and the feasibility of all that, and if that's the right decision for the coming year.
And the other piece of that is, you know, do this for you. Make this for you first. Make it so that you can evaluate the financial feasibility of your operation. And then if it satisfies you, you should feel enough ownership in that it makes sense to your lender. And so it's about owning what you're evaluating and making it sense for yourself and then to your lender.
So cash flow projections are talking about, will it cash flow? Will there be positive cash in the coming year? Are borrowings more than loan payments in the end, some of that? And what are operating loan needs? Denny talked about prices a moment ago. So the goal, and yields for that matter, the goal is to always plan for a quote unquote normal year. Don't be really aggressive with production or prices. Make sure it's something that you can attain or reach with your plan, and don't be overly conservative too. It's okay to be cautious, but you know, make it realistic as well.
Yeah, I can't add much to that. Only just, you know, the realistic part of it's the most important piece. Sometimes when you look to a normal year, you're like, oh, what does that mean? Just be as close as you can. It is projections, and it's tough to project.
Mm-hmm. Yep, it's an educated guess in the end, because you're not pieces might line up in the end, but you're going to be off on some things. It's how it is. So I do have a really quick poll built in. I think this will go fairly quick. So my question here to you on the slide is, does positive cash flow automatically equal profitability? So hopefully you're seeing my poll and you can answer that quickly. If you've done some of our other trainings, you've already seen this question. So you may already know the answer, and that's great. Okay. I'm gonna, well, assume a number of people have answered here. So I'm going to end it at this point and I will share the results. So all of you said false, and that is actually the correct answer. So if I go forward here, you know, they both may work in tandem, but just because you have positive cash flow in a projection doesn't automatically mean that you have a profitable operation for the coming year. There's ways to bring in cash that don't equal profits.
Yeah, I'd add to that is, you know, the big difference, especially in a profitability side, is a lot of times, or not all, a lot of times, in all instances, it's going to take into consideration non-cash expenses, depreciation being the biggie, and cash flows. Depreciation doesn't affect that cash flow, at least as it relates to you analyzing it. It does in the long run, because even though it's a non-cash expense, it's still real.
Yeah. And if you borrowed a bunch of money and hadn't paid it back, that obviously brings in cash, but it doesn't equal profit. So there's a few pieces there. So
that's right.
So let's take a look at determining those cash needs then. As you are preparing a cash flow projection, what are the components you need to think about, to pull together, to plan for the coming year? You know, we have a saying in our group in the center, you know, a cash flow is a cash flow. So here we go. Sort of what Denny said, you know, it's a best guess at the time. There is no right or wrong answer because we know that we're estimating yields, we're estimating prices. So that's sort of what this statement is alluding to, is it's our best guess today. So let's do our best at trying to estimate that. Like I already said, it's giving us the best results given the information we have today, the price outlook we have today, what we expect yields to look like given favorable weather, those sorts of things. And we know things are going to change. We've already said that. It's an estimate, but it does help us map out our coming year and what that may look like. And really a good projection will help you plan for the year and also prepare as needed. So, you know, it helps establish that marketing plan. So if you see that selling corn at $4, if that's part of your operation mix and $4 is being offered, well, then it helps you be more confident in that sale, some of those pieces. Okay. So like I just said a moment ago, you know, I titled this next one, Map for the Year. So it helps you plan for, as a producer, the different components of a statement of cash flow. So operating activities, financing activities, and also investing activities for the farm operation. So we are going to take a moment to just talk about what each of those three components of a cash flow statement includes.
Pauline, in addition, you know, you'd almost put a number 4 in here, and it could fall under investing activities as well. But it's, you know, capital purchases or capital purchase activity or sale activity as well. And we'll talk about that in a minute.
Yep, definitely. So to start, I think operating is pretty intuitive. It's what am I producing, and then what am I going to sell in the year? What expenses am I going to incur to produce that commodity, that enterprise I'm including in my operation, and what other farm income and expenses may I experience? So it could be government program payments. Maybe I have some custom hire operations that I do for others that I'm getting paid for. And there could be other business related expenses that don't relate directly to that commodity production. So it's all those things running through your checkbook, both inflows and outflows of expenses that are going to show up likely on the Schedule F, like we talked about last week. So that one's probably intuitive, and you can use that Schedule F if you've been preparing that, or your records from previous years to help guide that piece of it. Then the financing component, you know, we talked about balance sheets a couple of weeks ago, and the loan payments, the principal paid portion of that would be a financing outflow. So having that balance sheet prepared with the loan information will certainly help guide that. You know what loan payments need to be made for the coming year, but it also could be money borrowed. So if you do have a capital purchase, like Denny mentioned a moment ago, you may be borrowing for a portion of that. So including that money inflow, it could be operating loan funds coming in as well.
And I think it could also include inflow and outflow as it relates to accounts payable.
Yes, true. Good point. So yeah, if you have some of those on your balance sheet, things you need to pay at the beginning of the year. Yep, definitely. Then along with that, investing in yourself, I guess, is the way to think about that. So inflows and outflows related to your family or personal needs. So family living draws are what you need to have available to help pay for those normal living expenses we all incur, whether it's, you know, food to put on your table, utilities, some of those things that are outside of the farming operation. And then, you know, you may or may not have non-farm income, but if you do, certainly, and that is there to help support the family living expenses, or maybe even making some of those loan payments, certainly factor that in as well.
The other thing that makes this one a little complicated is on the family, the non-farm income is pretty much straightforward, but the family living, as you mentioned, Pauline, I like the idea of the draw, but there's so many interrelated expenses that could relate to outflows here. Whether it be gas for the car versus fuel for the farming operation. It's hard to sort some of those. And so without a doubt, family living is the one that can move all over the charts. And so it's a tough one, but it's one that you finally set your sights on with as much verification as you can do, and then live and be happy with it.
Yeah, like we talked about the first time, and Rob talked about it a little bit last week. Some of those expenses you need to split between what's personal and what's farm related, utilities, gas for vehicles, all of that.
That's right.
Denny already mentioned this one, but capital purchases and capital sales. So our example here is, you know, we have a manure spreader. So if you are moving out of livestock production, you likely don't need a manure spreader anymore. So that might be a capital sale for your operation. And if you're looking to change and add livestock to the mix, well, maybe that becomes a capital purchase. So you're thinking about those capital needs for the coming year and how they relate to your operation. So we've thought about the expenses. We know what we're including here. So how do we really pull this plan together then? If you have been producing for a period of time and you have some of this historical context, that certainly is the best way to help drive this projection. So historical production levels for your operation, prices based on what you may have already marketed or prices you may have locked in for future delivery, or you know what you see being offered in the near term with that elevator or whomever you're selling with. And then if you have prepared your records in previous years, you know, oftentimes expenses probably stay somewhat similar for a lot of our overhead costs. Your insurance costs likely are probably pretty similar. They change some year over year, but you can use that as a guide to help with planning for the future. So that's great if you already have a cat or have been operating for a period of time, but you know, some of you are looking at new enterprises or just farming in general as a new endeavor. So where do you get that information? Finbin, we'll talk about that website here in a little bit, but Finbin is a great source of that. You can look at university budgets that are more directly related to your area, your state, your commodity you're producing. So those can be good resources. If you can find other area averages from from crop trials or, other extension resources, other, a lot of agronomists and some of that can provide some of that background as well. So try to use what has been experienced in the area as a guide as you plan. So then types of projections, you can complete a cash flow projection in a number of ways. I have 3 listed here on the screen. So you can look at just an annual look at this. So what's my total projected crop or livestock or commodity revenue, those total expenses for the year, all my loan payments, my total capital purchases, and that works just fine. It gives you a very a holistic look at that. If you are needing to project operating loan needs, for example, or you're worried about within the month or within the quarter, if I have enough cash available to meet my obligations, well then doing a more detailed projection where you are looking on a monthly or a quarterly basis is probably better for your needs. So somewhat driven by your operation, and if it is a very seasonal operation where you may have some months or some periods of the year where you don't have a lot of inflows, maybe you need to do a greater look or a more precise look at that different periods of time for cash needs.
If I can, Pauline, I think I'd like to make a comment here. As we look at this, you said it, you hit the nail right on the head when you said annually is pretty holistic. I'd encourage everyone to consider the monthly. Yes, it's more time consuming. Yes, it's more detailed. And yes, because it's more detailed, it's probably more accurate in what your true cash needs are going to be. We rarely borrow money on a quarterly basis for an operating line. It's done frequently. And of course, we pay back frequently as a rule. But I think, concentrate heavily here on trying to do it monthly, unless it's a new operation and there aren't many transactions throughout the year. But agriculture is a huge transactional business. And to be accurate in what your cash needs may be, or what your income may look like compared to your cash needs, please consider monthly in the way you do it. I can remember the days when in the early 80s, because I've loaned money to agriculture over the last 40 years. Some of those cash flow sheets were the size of a kitchen table. Today with the technology, they aren't. They're very accessible and they're very capable of giving you what-if opportunities. So enough said, but please consider monthly. You'll be an advantage to you, and certainly an advantage to your lender who's evaluating those numbers.
Yeah, I wholeheartedly agree. It takes a little more time and effort, but it will give you the best picture. So as you begin, whoops, sorry about that. I clicked twice. So as you begin, start with the balance sheet. I already talked about that asset and the liabilities especially, but the asset mix, and if you have some capital sales and some of that. So how does that impact your plan? Production planning, we've talked a lot about that. What crops, what livestock will be produced? What's your intentions for the coming year? And you may want to run a few scenarios around that to determine what is the best for the coming year. And then the last piece, what are those inflows and outflows, including income and expenses, but also capital purchases, capital sales, loan borrowings that may be needed. So just helps you get the whole picture of the cash coming in and out of the operation. So it's, that's the goal of a cash flow projection, is to encompass all of those things. So as you then prepare your own cash flow projection, where do you start? It may seem daunting. I know we've said what information you need, but then how do you actually go ahead and do that? So a few options that I would suggest, or Denny and I would suggest, a lot of accounting systems, if you are using an electronic system, can help you prepare a cash flow projection. So that's one option, certainly. Usually it's a different component than your normal record keeping system. So you may have to do a little bit of extra work or even extra training perhaps to utilize that component, but that certainly can help prepare that cash flow projection. Spreadsheets are a great tool as well. If you have a spreadsheet to your disposal or you've built one, I certainly would suggest using that. Some of you may have done that. If you're needing an option, you know, we talked about I believe we talked about in our first session of an Excel-based worksheet that we have developed out of this center. I know this says balance sheet as our shortened link to it, but it is a Excel workbook that allows you to prepare not only your balance sheet, but then also your cash flow projection. So if you are looking for a source to that, you could certainly utilize that and go to that link there to do so. It'll download that automatically for you. And also extension or different groups, like educational groups, do offer cash flow planning tools as well. So those are all great resources that can help. You know, Denny talked about help automating things. So it's not just the paper and pencil doing all the math and writing everything down, which you can certainly do too, but these will help speed up that process a little bit.
And if I could, you know, in past years, a large portion of the financial institutions across the country used to do their own spreadsheet analysis. But admittedly, my bank included many years ago, but still we did it at that time. There were lots of gaps in our spreadsheets. And today I would venture to say the majority of the banks have seen the significance of pre-programmed, really great program out there, spreadsheet type programs, if you will, including the very one that that the people, the team on this particular program provide, and that's FinPack, which I personally use. So it's very, very important to try to get easy access, and oftentimes not very expensive to get to something that's already pre-prepared and less chance for error. Enough said.
Right, it helps lay out all the components, and yep. I know something that the Intertribal Ag Council also offered during our, we did a native lender series earlier, or the end of 2020 actually, was they have a technical assistance program. So this, I'm not sure if it'll translate into the handout or not, but that is a hyperlink. But if you just go to their website and look for technical assistance, I think that they have a number of team members that's their job, is to provide that support to native producers to help them do some of this planning and budgeting and everything. So great resource if you are needing some additional help to get started and think through these things. So Zach and his team, I think, do a really good job of that. So as we analyze the cash flow then, after we have it put together, how do we analyze it, and what are we looking for there? So we took the approach of, I'm taking this to my lender. Now, what's my lender going to want to see, or what are they evaluating me on? So we're not going to spend a lot of time. This is a really high level overview, but I think it's important for you all to realize what your lender's looking for as they evaluate a credit request. You may have heard, or if you Google the 5 C's of credit, you will come up with these 5 things, and I think they are pretty universal in what lenders are looking for to evaluate the creditworthiness of requests that come across their desks. So you can see those 5 C's. We're not going to talk about all of them. We're going to talk about the ones that relate to cash flow projections more so today. So we're going to talk about capital and capacity a little bit. We've talked about collateral in the past in terms of assets that you have. We talked about that in the balance sheet a little bit. character is just how you handle credit, your credit score, you know, do you pay payments on time, all of that. That's the resource, the go-to resource these days is that credit score. And then conditions, what's the outlook for the commodity you're producing? You know, given the industry, what, not only for your operation based on your projection, but then what's the bigger picture for that agricultural sector?
Yeah, and if I can, the character piece of this is probably the most objective part of it, and the toughest part, because weaved within that analysis of who you are is that lender trying to convince themselves how good a management you have. And that's a big, big factor. And we'll see that later in this presentation as it relates to, you know, you and you dealing with your lender on your loan request. But it's big item, but it's very, very objective.
Yeah, good point. Very, very, very subjective there. So digging into a couple of those, first of all, capacity. So in relation specifically to cash flow projections, it's that loan repayment ability, looking at that coming year and that cash flow plan or projection. Are you able to make your loan payments? What does your solvency position look like beginning of the year versus ending of the year? So again, that's looking at all the assets and all the liabilities you have when we talked about the balance sheet from the first session. So how do we measure that? A couple of ways here. I think the most common would be debt coverage ratio. So a lot of lenders will zero in on that. We can look at that here in a moment on our scorecard, but debt coverage is just your ability to make those loan payments that are presenting themselves for the coming year. That net farm income, it's not a ratio, it's just a number for your operation, but is it positive? Is it sufficient? Are you able to make progress on operating loans? What's working capital position do, and what's that debt to asset position do from beginning to end of the year for your operation and in your projected scenario for the coming year?
I would also add working capital position. Last 4 or 5 years has been ultra important to the banking industry, to the finance industry and financing agriculture because of the tougher times. And so keeping the liquidity in your operation and having a strong working capital position, or one that's at least is much to the positive, is very helpful and hard to attain in these last last 3 years of time. But really important to keep an eye on and trying to keep improving it. And there's several ways to do that, but we won't get in that detail today.
So I mentioned the scorecard a moment ago. This is a resource we have on our website. You know, we haven't talked about all of these individual ratios. We've talked about some of them, but how do you know what a good ratio is or what a good number is for some of these things? So I think this is a really nice resource that helps lay out, and I think this lines up with lending standards quite often. You know, what's a vulnerable position for an operation to what's a really strong position. The other nice thing, and I don't have it on these slides, but this resource actually walks through what does current ratio mean, how is it calculated, and a little bit on interpretation. So I think a really nice resource that maybe is underutilized, but if you're needing help with some of this and some background, I think something that I would offer to you. If I move on to the next slide of this, you can see we do have a shortened link for that as well. So if you type that z.umn.edu/scorecard, you can get to the full document. We talked about a moment ago in repayment capacity, the repayment portion of that. So term debt coverage is what we're referring to here as that capacity measure. So then just as a lending standard, not that these are set in stone or every single institution is exactly this, but I think these are some broad guides for you as you're evaluating your operation and perhaps the credit worthiness. or how you line up in the eyes of a lender or a financing institution. So having liquidity, working capital is certainly a component of that, like Denny just said, but the current ratio at 1.25 or more, debt coverage, that same 1.25 or better, debt to asset ratio, so more assets than debt, 50% or less. Not being able to put cash down on some of those capital purchases. So having that ability to fund part of the loan request yourself, having positive net worth gain, and then that credit score oftentimes becomes that proxy for character, since it is a way to make a subjective measure a little bit more objective, I think. And there can be mitigating reasons, exceptions to policy, all of that, but I think these are a starting point for a lot of institutions. So some other business planning resources, moving beyond just cash flow projections here, as you are planning for your business and putting some of those resources together. So first of all, I would offer a lot of these tools I'm going to show in the next little bit, or Denny and I are going to show, we did take a deeper dive on them and did a series of webinars last spring, again, with the fine folks that are helping with this series. So this is found on the Native American Agriculture Fund's website. I know they're archived there. They may be archived in other places as well. But if you go to this website here or look for Ag Resources on the NAAF website, you can find this series of 6 webinars, I do believe, that talk about a lot of the tools in more depth that we'll look at next. So I know we're going to do a really broad overview here, so wanted to give you some places to look for some more information if you're interested. So the first one is Eggplan, and that Excel template that I referenced earlier is part of our Eggplan offering. So Eggplan is a website where you can build the business plan for your operation. We'll talk a little bit about business planning here, a little bit more depth at least. So, anybody really, our theory is anybody can benefit from doing a business plan, whether it's a new business, somebody that's making some enterprise changes or expansions, or if you have, a unique operation, all of those are great reasons to do a business plan. And even if you haven't done one in a while and need to continue to plan for the future, I think those are all valid reasons why you'd want to prepare a business plan. So some more on why to prepare a business plan. First of all, it helps you communicate your business plans or communicate what your operation is about, whether it's internally for yourself and other members that may be involved on your team, whether it's other family members, other employees. It just helps everybody get on the same page and understand what the end goal is. But also, if you have a document such as this to take to a lender, for example, or other partners outside members that may be looking at your business, I think that really shows that you've taken some time and effort, and you have a plan in place for the future and where you want to go with your operation.
If I can,
but
also,
yeah.
Go ahead, Holly. I'm sorry.
No, I was just going to say it is that blueprint. It's most important for you to help you improve your business management, sets that record or that train track for your future. So go ahead.
Okay, I just wanted to say, if you were to hearken back to the very first slide we started with today, I think it mentioned something like how to tell your story. The business plan is telling your story. And in the next few slides in this deck, you're going to see us talk a lot about telling your story. The fact that you do the cash flows we just talked about is literally supporting documents to that story that you're telling, and will help verify for yourself as Pauline mentioned, but as also for your lender. And so we'll talk a lot about that. A business plan is overlooked a lot of times, but it comes in various, it looks different for every person that's coming in to get a loan, obviously, but it's important and probably isn't emphasized enough these days. It's what this is all about.
Yeah. So, you know, we talked about, Denny talked about that vision or that plan. So Eggplan will help you work through all of these different sections as you pull together a business plan. Just that high level executive summary to the different components you see there, whether it's the operations plan, the marketing plan, all of that. So that's a really nice resource that walks you through that process, provides some resources along the way and some examples, and just helps you get to maybe thinking about all the components, all the links of the chain as you see in this slide in preparing that business plan for your operation.
Yeah, most of these business plan programs are very thought-provoking. So they just kind of lead you along, and it works. At the end of the process, you'd be surprised as you look back at it and say, this looks really organized, and that's what that plan's all about, being organized and allows you to articulate what you want to say.
And hopefully spurs some thoughts maybe you hadn't thought about or realized you needed to think about along the way. So related to Eggplant specifically, and there's other tools, but in this tool specifically, it is web-based. It's not only for traditional commodity agriculture, but we have some other examples related to rural small businesses, value-added agriculture, even transitioning into an organic operation. So pretty all-encompassing for different types of businesses you may be looking at as for your operational plans. Each of these plans has, like I said before, an outline. It has some tips or questions or suggestions, some resources for you to look to if you're needing more information on a specific component, and then also samples or examples for you to refer to if you're struggling with that for yourself, to help guide you and help get the best plan possible. The other nice thing about Eggplan is it can be used in tandem with others who may want to look at your plan. So you, the producer, would initiate it and do a lot of the legwork, but you can have somebody else log in and review it if you'd like. So it may be a lender, it may be some sort of advisor or a family member, a mentor, whomever. You can determine who that is. And as you grant them access to your plan, they can be able to just make comments for you to review, or you could actually grant them editing authority. So depends on who that is, of course, and what you'd like them to have the capability to do. But I think a nice feature to help make sure that you are putting the best plan forward.
Pauline, I appreciate the fact that you included bankers to that list. Just because you're making this plan, first of all, for yourself, and then ultimately for your lender, don't be afraid to contact them in the middle of this process, as she just said, as you're putting it together. I can't tell you how impressive that is to a lender when a potential borrower or a borrower comes and tells you what they're doing, but we're stuck. Can you help us? Yes, they will, because they're just going to be impressed for the fact that you're looking to a business plan that you can verify later, but I'm proof positive they would be more than willing to help. And I think it's the educator, the advisor, or the banker. Please include the banker. The banker wants to see you succeed, so I think they're tickled pink when they can help be a part of that process. That's exactly right.
So a few other resources. I mentioned Finbin earlier, just wanted to point that out. So that is another free website. You can see that address here, But if you look on the left hand side here, you can run a number of different reports. Again, if you're needing to look at potential profitability or normal expenses for crop or livestock enterprise, you can do that here in the summary reports. This dates back into the 90s, so you can find a lot of historical context if you want. It's updated each year, so soon we'll start putting the 2020 data in there. So that's one component of it, is the summary report, but then also a benchmark report can help you as you evaluate your farming operation. How do I line up with my peers? So that takes that average number and it shows you the full high to low information in 10 percentiles from high to low. So you can see, am I spending too much on seed compared to my peers? Or, maybe I have higher than average production, but it just helps, can help you take a look at those strengths and weaknesses in your operation. So if you already do have that enterprise that you're established in. Also, there's a compare your financial ratios component there as well. So if you have taken the time, you can compare your ratios that we looked at a couple minutes ago to that database, and you can look at, you can query this down to be specific enterprises, specific areas, so you can see some of the states we work with on the screen in that process. Another resource, a really good resource, is Farm Answers. That is it's the USDA NIFA Beginning Farmer Clearinghouse. So it does say Beginning Farmer in the title, but Farm Answers, I think, is a great resource for anyone. So you can look at the library and find different resources related to production and marketing and all of the risk management components of your operation. There's different programs, current news items, toolboxes for you. So a really good resource to poke around in if you are looking for some additional resources. And again, all these things I'm showing you are free, and you can just go to the different websites here and utilize them. Ag Risk is a similar website, but different in the fact that it's got budget library. So I mentioned extension. So a lot of the extension budgets are found on this website. There's a library of materials. So maybe some overlap with the Farm Answers, but there is some more specific pieces to this as well. So another good resource if you are looking for some specific information. So those are the business planning resources that come to mind quickly for me. We talked about some of those in that other series, like I mentioned at the onset. So if you are interested in learning more, certainly take a look at that series posted on the NAAF website, and you can take a look at the specific webinar you're interested in. So preparing, lastly, for your loan meeting can be a daunting and maybe nerve-wracking task. So we just wanted to spend a couple minutes on what do you want, or what should you prepare to bring to a lender for that initial loan request, or even on an ongoing basis. First of all, financial documents. We've talked about all of these throughout our time together. So that tax return history or that income statement history, balance sheets, cash flow projection, and income statement. So all the things we've been talking about are, well, if you have prepared them, will certainly help you with that loan request. And then what we talked about today, that action or business plan.
If I can, Pauline, I think this is one of the most important slides in their presentation today. And let me put it into perspective. Again, from where we started earlier, the only thing we didn't add in there is this whole page includes 4 things. One, and it's where have I been? Well, that's those balance sheets, 3 years of them. That's gonna that's gonna tell that that lender a lot. The income statement, past 3 years, tax returns. That's where you've been. The balance sheet itself today. The present balance sheet will tell you where you are. But let's remember that the business plan sits at the top of these final documents in my mind, because It needs to have 3 years tax returns, 3 years balance sheets, everything listed here. But that tells your story. The story is about where you have been, where you're at now, where you're going. And the very last point on this one is, how am I going to get there? You've got to execute on that plan in order for it to have any chance and have the ability to have your lender look at that and really give your management ability some credibility. And so it's about the business plan. It's about telling them where you've been, where you are, where you're going, and then how you're going to get there. And if you come in with that kind of plan, whether it's your existing borrower, you're brand new, and those items are realistic, as we've talked about before, it's the way you want to prepare for that lender. It's the way that lender wants you to prepare when he or she walks in that door to look at your credit.
And sometimes you don't have 3 years of some of this information. You haven't been producing that long. I wouldn't let that stop you from seeing your lender, but still having those 3 things, like Benny said, where you are, where you've been, and where you're going laid out is the important part there. Also, the lender might follow up with some other questions. So related to your specific operation, what else might they ask for? They might ask for some other production type records, whether it's crop insurance. DHIA is a dairy record keeping system. So there may be others as well, but just some verification related to production to see if what you're using in your projection is feasible. Income related. So do you have any marketing contracts in place? Do you have off-farm income? Just having some verification of some of those things sometimes. Expenses, if you do have some contracts or receipts related to things you've already spent money on, again, may want to see that. And then other risk management components, just that help, for lack of better term, shore up the credit, help provide that umbrella safety net for you. So whether it's crop insurance or other property insurance, perhaps life insurance, depending. So just some different verifications that, just so you're aware, you may be asked for along the way. Then lastly, just a little bit on communicating, and these are just really high level things, but as you work with your lender, just some of my thoughts, hopefully Denny agrees with that. So first of all, we talked about having your lender take a look at your business plan, but I think that's certainly one component, but I think just making your lender a part of your team in reality. So stopping in and talking with them, keeping them abreast of what's going on in your operation, making them an advisor or a part of your team, somebody that you keep informed throughout the year, not just when you have that loan request. When I was lending, I always loved to see my customers and just get that quick update from them, how things are going, whether, it can be good or bad, things happen. So just being informed, though, it's better than getting that surprise when things go really bad. So
it shouldn't be intimidating. And I know I've even sat in your side of the desk as far as trying to borrow funds. And the very first, it was intimidating for me. And then I figured out what it felt like when I got on the other side of the desk and became the lender. Well, let that lender be your sounding board, just what Pauline said. Throughout this whole process, it's only going to go a long ways in again, proving your management ability, which is what that lender in the end is really trying to do. You've given them the story, and by that, you've verified the numbers that make sense, that hopefully make sense to them and you. And then consequently, you've proven up the fact that you're a good enough manager to know the process. That's going to go a long way and should reduce some of that intimidation.
Yeah, good point. Along with that, we've talked a lot about how to be prepared for those meetings. So just like going to school, when you were going to school, come prepared to class, come prepared to that meeting. It's going to make everything go much smoother. Sometimes, of course, the lender may have additional questions or additional needs from you, but if you come with a lot of these things already there, it puts your management ability in a positive light, and it also just helps the lender get to work and helps them do their job more efficiently. I'd also say don't go to your lender the day before you need the funds. It takes time. Lending transactions take time oftentimes, so they need to do their due diligence in the process. So give them plenty of time to do their work. It will, again, just highlight your management ability and make the whole process go smoother. Then also be proactive and strategic. We've talked about that business planning component there. So if you have that plan in place for the coming year for your loan request, depending on the scenario, that again just makes you look like a better manager and somebody who's has a better character, better credit worthiness in the end.
The other thing I would add just very quickly is I've tried over the years to instruct my staff, other lenders, please, try not to say no to request, but instead look at that borrower and say, hey, this is what has to change for me to say yes. If you run, and not all borrowers or lenders think that way. So sometimes if you go in and you find a lender that doesn't, and the answer ends up maybe being no, then be prepared on your part of it to say, okay, lender, what do I have to do for you to say yes? So you can turn the table on that. And I would strongly encourage that you remember that.
Yeah, very good point. And sometimes just like in medical matters or what have you, getting a second opinion isn't, if you're not comfortable with the lender you're working with, you certainly reach out to someone else because they, like we said earlier, they want to see you succeed, and hopefully they are giving you some of that advice to help make your operation better in the end.
Exactly.
And then like we already said, just be willing to cooperate and help your lender along the way. So communicate with them, answer their questions, provide that information that's needed. Again, just be an open person who's wanting to highlight your management ability. If you're keeping things yourself, not answering questions, not giving that information, in the end, it's not going to benefit you, most likely. So.
The other thing is, and it's been mentioned earlier, but I want to restate it again. Your lender, be patient with them as well. They may, the same day you came in, they may have had 3 or 4 or maybe 6 other loan requests that they're going to be working through as well. Each one of them is a priority to them, but there's only so many hours in a day. And so be patient. It takes time, much more time than it did 40 years ago when it was either a yes or no, and here we go. So please be patient.
Yeah. And then, like Denny already said, ask that question. If your lender isn't offering other options, ask them what may be best or what would be best to change if the answer is no today. But just thinking through what's best for everybody, what's especially best for your operation and most feasible for you in that lending scenario. So with that, that's a little bit on how to tell your story to your lender. Hopefully that gave you some insights and some thoughts as you prepare for that, for your operation. This time of the year is often not only when we're preparing tax returns and filing that Schedule F, but it's also planning for the coming year, at least in the upper Midwest specifically where we're located, because it is the off production season for our crops especially, but it's just a new slate, a new year. So doing this cash flow projections and all of that now is a good time to do that, and lines up with your balance sheet preparation. We talked about doing that at the beginning of the year. So it's just good to tie all of that together.
And it's a true reflection on your management ability.
Mm-hmm. Yeah, the more time you and effort you can put in this, the better. It just shows your management ability. So with that, I would say if you have any questions, certainly ask them. Feel free to chat them in or unmute yourself. I know we're a little bit long, sorry for that, but thanks for hanging on. And if you have, if you have follow-up questions for Denny or myself, certainly reach out in the future too. I think we're both, I'm speaking for Denny, but hopefully it's safe to say that we're both very happy to answer questions or help if we can. So
very much so. Sorry for the technical difficulty that cut us short in some time, so I apologize profusely.
Hey, it was me the first session when my Zoom went out, so we all have it. It happens.
Thank you.
Yeah, thank you all. If you don't have any questions, feel free to end your time with us, but do appreciate you joining us today and reach out in the future if needed.